completely crippled.
4 surgeries, trying to heal a detached retina.
Like, I can't eat. 4 years of this pain and throwing up.
In 2017, we had found out he had a tumor.
They wanted to do an operation because I had 90% block or 80% blockage in my heart. And I didn't want them to do it because they tried killing me the first time they tried doing that, putting in a stent.
I was born with muscular dystrophy, a rare form. There's 43 different forms, and mitochondrial disease, which is a genetic defect in every cell of your body.
But that man has not had a breath without assistance in over a decade.
Blood disease, liver disease, kidney disease, any disease. They brought unto him all the sick. And no matter what their sickness or what their disease, he healed them all.
He left here, took the oxygen off of his nose.
I looked at her and said, I can see all those holes.
Hair test, and they said your respiratory function is above anything that we can imagine.
It was the last day that I used a walker.
Yes, I just believed it, and it happened. Just his words were so powerful. It just moved me.
When you touched me, it felt like when they gave me the injection with the stuff to go through to see what the arteries would block. It just all ran through, just hot as it could be.
And he saw that the tumor was gone. Completely gone, there's nothing there. The tumor looks like it's healed. The bone looks completely healed, like nothing was even there. There was no surgery that ever happened or anything on that bone.
You've already won the victory. Hallelujah. Shout it out, I've already won.
Why should you come to RTBI? The education that you're going to experience here is like no other. You're going to get a solid foundation on the Word of God, but you're also going to be exposed to the power that comes behind it.
I was listening to Pastor Jonathan's sermon, and at the end of the sermon, he gave an altar call for those that feel a call into full-time ministry.
I decided to act and move and apply, and I got accepted, and I can assure you that this Bible Institute has taught me so much. They teach you the Bible, and they teach you the true, full gospel.
The fire of God is coming upon teenagers, college students that say, I don't care about the approval of Viacom and MTV and the movies. I made up my mind. I'd rather endure the shame and disgrace of this world and have the pleasure of God.
And on that floor, I cried and I cried and I said, Lord, I know that you hear me. And the Lord spoke to me and said that if I won't move here because of fear, I will never go to the nations, because how much more will I yield to fear then? And in that moment, I knew that my life isn't going to be ordinary. In that moment, I knew that it was up to me how far I'm going to go with God, and that it's up to me if I'm going to make this decision. It changed my life forever.
First, I'm going to be strong in the Lord and the power of his might. So congratulations again for being what's right with America. There's enough principled people full of God's fire in this room to shut down every plan of the devil for this generation. You'll do what God's called you to do and be who God's called you to be for the rest of your life.
Brother Jonathan, Sister Evangelist, this is Stephan from Feed the Hungry reporting to you in Nicaragua. To everyone who's part of Revival today, I want to say thank you for answering the prayers of hungry people all around the world throughout this year. Because of you, the ministry of Feed the Hungry this year has just expanded to reach so many more hungry people around the world. We've seen about a 40% increase in our ministry activity. Because of you, millions are able to look up to heaven each and every day and thank God for food in their bellies and for food for their children. I'm in Nicaragua this week, and one particularly heartwarming story was a woman we met who is in a little village. She's part of the feeding, her kids are part of the feeding program, and in speaking with her, asked, what does this food mean to you? And she said, you can never understand what this food means to my children and me. And I thought about that for a minute, and it's so true. We have no capacity to identify that kind of desperation and hunger. She said, it used to be when I would put my children to sleep, they're crying. I'm a single mother. I put them to bed, knowing that they would have nothing to eat the next day. And I just put them to bed on an empty stomach. And their stomach is painful and they're crying because of it. She said, when the feeding center started and I saw the food there day after day, it gave me and it gave us hope. Thank you for giving hope to mothers, to children, to people in great need around the world. We've responded this year to the Ukraine war conflict with over 20 million pounds of food going into that region, into the hands of churches to give out daily bread to those that are praying for something to eat that day. We've responded in the United States with hurricane relief down in Florida, and right now, well over 425,000 children get to look up to heaven and taste and see that the Lord is good because of you.
This year, we're going into the wild.
Coming to you from Main Street, America, in the heart of Rust Country, home of industrial titans like Carnegie and the Mellons, we are bringing you market analysis, news, and everything you need to know about the economy and investing. Live from Pittsburgh, Pennsylvania, it's Check the Market.
Good morning, everybody. Welcome to Check the Market on this beautiful Tuesday morning, here live from Pittsburgh, Pennsylvania. Wayne from Buenos Aires, Wilson, Nathan. Thanks for tuning in, Bethany. Nice to see you. Thanks for supporting the show. Make sure you share the broadcast with all your friends that are interested in investing and that aren't interested in investing, because we'll get them interested. Rick, welcome from Tennessee. John, good morning. Julianne, Rhonda, Caitlin, Griffin. Thanks for tuning in, everybody. Tucker Carlson is out. Don Lemon is out. Biden just announced re-election. So we're going to be looking at all of that today. Big Tech is going to have their earnings coming up today and coming up this week. Dale, Griffin from Tampa, Michael, Melanie, Fervent Faith from San Diego. Thanks for watching, everybody. Z, Nancy, thanks for tuning in. This is Check the Market live from Pittsburgh, Pennsylvania. Let's go ahead and start with Tucker Carlson. Tucker Carlson's Fox News exit erases $507 million in value. He was the #1 show on Fox News, had the highest subscribership, and he's out. And obviously the stock wouldn't react very well to something like that if you lose your cash cow. So let's take a look at the article. Tucker Carlson, one of the most popular Fox News primetime hosts, was worth more than $500 million to the parent company. I would say he's probably worth close to $1 billion. At least that is what trading in the stock indicates. Continue. Class A shares of Fox Corp sank as much as 5.4% on Monday, before trimming losses to 2.9% after the company said Carlson had left with immediate effect. The departure comes just days after the network agreed to pay $787 million to settle a defamation suit brought by Dominion Voting Systems. Fox Cable News is now in rebuilding mode, and it will likely take time for the stock to recover, said KeyBank Capital Markets analyst Brandon Nispel. With the advertising upfronts right around the corner in May, we wonder what Fox is going to tell advertisers and how it will fill the gap in terms of programming and viewership. Excluding sports, Tucker Carlson Tonight is the top-rated primetime show on cable TV. Oh, not just at Fox, on cable TV, according to the most recent Nielsen ratings, with a nightly audience that at times exceeded 3.7 million viewers. That said, the channel is likely to regain the majority of all of its overall viewership once a replacement host is announced. So there you go. Tucker Carlson's out and cost the company as much as $500 million on their valuation of their stock. So Fox Corp might not be worth investing in right now. Continue. As speculation over Carlson's next landing spot spread, investors snapped up shares of Rumble, the Peter Thiel-backed conservative video network, and Digital World Acquisition Corp., the special purpose acquisition company merging with Trump Media. Both stocks erased declines, with Rumble stock rallying 6%, while Digital World gained 2.9%. Carlson's exit is definitely going to leave a mark on Fox, said Matthew Tuttle, CEO and CIO of Tuttle Capital Management, which also runs the Inverse Kramer ETF, SGIM, who bought shares of Rumble. So there's speculation swirling about what he's going to do next and where he's going to do next. How many think he's going to start his own thing? How many think that he's going to go with somebody like Ben Shapiro? Let me know in the comments what you think that he is going to do. It'll definitely be interesting to see. Wherever he goes, I'm pretty sure that he'll be worth a couple of $100 million doing that, because he's going to take his viewership with him wherever he goes, or at least a majority of it. Continue. McDonald's earnings beat estimates as U.S. traffic grows despite price hikes. So McDonald's did well. Still a great stock to own. Always has been a great stock to own. Continue. McDonald's on Tuesday reported quarterly earnings and revenue that topped analyst expectations as U.S. consumers keep buying Big Macs and Shamrock Shakes. Shares of the company rose about 1% in pre-market trading. Here's what the company reported compared with Wall Street expectations. Earnings per share $2.63 versus $2.33. That's pretty good. Revenue $5.9 versus $5.59. That's a pretty good beat. The fast food giant reported first quarter net income of $1.8 billion or $2.45 per share, up from $1.1 billion and $1.48 a share a year earlier. Excluding $180 million in restructuring charges and other items, McDonald's earned $2.63 per share. Net sales rose 4% to $5.9 billion. All three of its divisions reported same-store sales growth of 12.6%. So McDonald's is doing good. I think McDonald's is going to continue doing good, even as there's talks of recession and things like that. McDonald's is something that a lot of times is an alternative when you're trying to save money, and so McDonald's is a stock and a company that will do well in almost any economic environment. I did see that, Logan, McDonald's is doing fully automated stores, but they are still going to have somebody in the store that's going to make sure that everything runs smoothly. So there's going to be 2 or 3 people still employed at the store that are going to do, make sure that all the machinery runs and everything. But they are going to do fully automated stores in the near future. I don't know if they already have one. I believe they had one trial store that was fully automated that I read in an article a while back. But that is interesting what McDonald's is doing. Continue. And yes, the ice cream machines are still down. That is a good point, Michael, that you bring up there. So if they go fully automated and they can't seem to figure out their ice cream machines, maybe that's going to be not so good for them. In its home market, higher menu prices and increased traffic fueled same-store sales growth, which topped street account estimates of 7.9%. McDonald's U.S. traffic rose for the third consecutive quarter, bucking the industry's trend of slipping traffic as menu prices rise. Historically, fast food chains like McDonald's have fared well during times of economic uncertainty as consumers trade down to its cheaper meals. I have paid attention to this. It's something that I like to keep an eye on, it's like my own little, economic indicator. I have seen a lot more nicer cars in the McDonald's drive-thru, which tells me that, people are trying to save money where they can. Outside the United States, McDonald's also saw better than expected sales. Its international operated markets, which include the United Kingdom, France, Germany, and Australia, beat street account estimates of 8.5% same-store sales growth. Its international development licensed market segment, which includes China and Japan, topped same-store sales expectations of 10.5%. So McDonald's seeing good growth there, very good growth. Continue. Wayne said McDonald's is going to be reduced to a manager, an IT guy, and the janitor. So he probably read the same article that I read on that there's still going to be a couple of people that are going to be in store to make sure that everything is running smoothly. Let's talk about hydrogen a little bit. Want to cash in on clean hydrogen? HSBC shares its stock picks, giving one over 110% upside. So hydrogen is the alternative to electric vehicles. And I think that hydrogen is going to, once they figure out that we need to build way more nuclear power plants to power all these electric vehicles that are trying to get on the road by 2030, I think that hydrogen is going to surpass electric vehicles. That's just my personal view of the whole thing. So let's see the article. Analysts have been very bullish about investing in an area of clean energy, hydrogen. Clean hydrogen remains a more compelling decarbonization option than batteries when it comes to trucks, ships, trains, and planes, HSBC said in an April 20th note. Clean energy has been gaining impetus with the U.S. Inflation Reduction Act, and some regard hydrogen as a renewable power source. Though clean hydrogen is expensive to produce and the industry is still in its infancy, and though not all types of hydrogen are equal, it has the potential to play an important role in tackling the climate crisis. The energy it creates produces no atmosphere-warming carbon dioxide. When hydrogen burns, it generates energy in the form of heat with water as a byproduct. There are a few types of hydrogen. The cleanest type, green hydrogen, uses energy from renewable sources, while so-called blue hydrogen is produced from natural gas. And blue hydrogen is one of the biggest ones that they are taking a look at. Continue. Hydrogen in transport is increasingly focused on heavy-duty passenger segments and less so on passenger cars. According to HSBC analysts, with hydrogen in transport expected to be deployed more widely from the latter half of the decade, exposure for the majority of large companies remains small, but offers the potential for future growth. So this would be for trucks, for trains, and things like that, because the amount of battery power that you would need and the amount of charging to charge, for example, a train or charge a truck is incredible. And so hydrogen is the alternative to that. In the note, the bank highlighted stock that offers exposure to hydrogen in a variety of ways. They include areas such as electrolyzers, a technology critical for the production of low-emission hydrogen, utilities, industrial gases, trucks, and autos for markets in Europe and Asia. HSBC named 18 such stocks. Here are a few of them. Sears Power. HSBC said Sears, which makes green hydrogen electrolyzers, has a unique solid oxide technology, a process that produces electricity directly from oxidizing fuel. The bank gave Sears a price target of £4.40, or the upside potential, pence, not cents, or potential upside of 30%. Continue. That is true, Wayne. Hydrogen did work just fine on the Hindenburg. They have made it much more stable. And I think that the Hindenburg exploded because the hydrogen that they used was the hydrogen that they could produce in Germany at the time. There was a a lack of the hydrogen that they needed, that they use in a lot of the, that was less explosive or something like that, if I remember the story. Longy Green, Shell, HSBC says Shell is a major player in hydrogen refueling networks with ambitious growth plans in low carbon hydrogen. It gave Shell a price target of £29.20 or possible upside of 18%. And then Stellantis, fleet of mid-sized vans include fuel cell electric vehicles which are powered by hydrogen. It aims to extend the use of FCEVs to large vans in Europe and the US in 25, the bank said. So that would be Ram, the Ram vans that we have here in the United States, or Fiat if you are in Europe. Continue. Let's take a look at the other article that I sent about hydrogen, and we'll just clump them together. It's the hydrocarbon capture technology from Barron's. And yes, markets are open. Thank you, Nancy. Markets are open. Let's take a look. Pre-market, everything was down. And markets are open. It's just down a little bit on the Dow Jones, down 22 points. 18 points, the S&P 500 down 17 points, and the NASDAQ down just over 0.5% at 66 points. Oil is down $77 a barrel. Natural gas is down 2.38%. Gold is down back under $2,000 at $1999.70. Silver is still at just over $25. And cryptocurrencies, Bitcoin, 27,410 at market open. Let me refresh this, make sure I got the correct one. 27,452.02, so back under 30,000 from where it was last week during the show. Ethereum, 1831. XRP, 46 cents, down a little bit from where we were last week. Dogecoin is at 7.9 cents, so also down from about 9 cents. Shiba Inu, still trading in its normal range there. Avalanche, $17.17. So not too good of an open there for the market, especially after last week. But the market is awaiting big tech earnings, and I guess we'll see what happens there. Bring back the clanging bells. Yes, I agree. Let's bring back the clanging bells for next week. Continue. Thank you, Tamara. To the article that I sent from Barron's. It's the, hold on. It says carbon capture is set to take off. Yep, there we go. Carbon capture is set to take off. These companies are ahead of the game. Continue. Carbon capture and storage, the technology that traps carbon dioxide from industrial processes and permanently sequesters it in rock formations underground, has become a much hyped answer to the world's need to quickly rein in greenhouse gases, emissions, etc. While the technology can truly scale up remains to be seen, but many companies, lured by the huge market potential and lucrative government subsidies, are plowing ahead anyway. So one of the biggest sections of the Inflation Reduction Act that was passed last year has a lot of money set aside for carbon capture technology, and so these companies are moving ahead, trying to get these subsidies and to get going with the carbon capture. One of the latest examples, industrial and gas giant Linde, LIN, recently announced a long-term deal with ExxonMobil, which will transport and permanently sequester the huge amounts of carbon dioxide captured at Linde's new hydrogen facility in Beaumont, Texas. The 2.2 million tons removed of CO2 a year would be equivalent to the emissions from nearly 500,000 cars. In theory, carbon capture could significantly reduce emissions from fossil fuel power plants and heavy emitting industries like steel, cement, and chemicals. The United Nations Intergovernmental Panel on Climate Change, blah, 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 made it clear. Okay, continue. For years, carbon capture projects have struggled to take off due to the vast investment needed up front and high operational costs. With last year's Inflation Reduction Act unleashing billions of dollars in tax incentives, however, investments are set to pick up in coming years. The potential market is huge. According to the International Energy Agency, 85% of stationary emissions in the U.S. come from plants located within 100 kilometers of a potential geological storage site. The estimated storage capacity is about 160 years of the nation's current energy sector emissions. Fossil fuel giants and industrial leaders are quickly moving into the space, while the rising demand for transport and storage facilities could spur a wave of infrastructure construction in certain regions. The industry is set to create new winners while helping some of the largest carbon emitters survive or even profit from the world's transition toward net zero. Continue. Carbon capture isn't new. For years, oil and gas have been using the CO2 captured from other industrial plants to enhance their production, while others sold the captured gas to industries that needs it as feedstock, such as chemicals and food companies like Coca-Cola. The adoption has remained limited, however, as the technology wasn't economically viable. If the additional income can't cover the expense cost of an upfront investment. Petronova, one of the largest U.S. projects capture of CO2 from a coal-fired power plant, closed down in 2020 after the pandemic reduced demand for fuel and led to a collapse in oil prices. More than a decade ago, the U.S. government introduced tax incentives that offered businesses up to $50 for each ton of CO2 permanently stored underground, or $35 if used for enhanced oil recovery. Continue. There's the cost of CO2 capture. Continue. The Inflation Reduction Act could change the market dynamic. The bill introduced significant modifications to the existing tax credit, boosting the payouts to $85 for each ton of CO2 sequestered underground and 60% for those used to enhance oil recovery. For many projects, the economics of carbon capture and storage finally make sense. A key aspect of the policy is that the gap between the two numbers has widened from 15 to 25, says Julio Friedman, chief scientist at carbon management firm Carbon Direct. So let's keep going. I want to get into the companies. Best carbon companies to invest in. That's coming up. The Green Rush, thanks to the decades of experience in the field and massive capital available to deploy, fossil fuel companies are some of the largest players in the carbon capture business. Many energy giants, including Exxon, Chevron, Shell, BP, out of those I like Chevron the best, have created low-carbon business ventures in recent years, and carbon capture is a key part of their ambitions. The fossil fuel industry will be a driving force in carbon capture because they want to remain viable and competitive. Many of these companies are hoping that revenue from low-carbon business could one day exceed oil and gas sales and produce even steadier profits. Occidental Petroleum, which is one of the companies that Warren Buffett has recently heavily invested in. A major player in the space currently has 14 CO2 recovery plants, 2,500 miles of CO2 pipelines, about half the US total, and thousands of CO2 injection wells in the Permian Basin used for enhanced oil recovery. The company plans to build 5 carbon sequestration hubs in Texas and Louisiana, and is also working to further develop its pipeline network to gather CO2 from industrial emitters in the region. The firm says it's already secured agreements with access to over 265,000 acres of land space. So Occidental would be a good one to invest in as well. Continue. Occidental is also building a plant to directly remove CO2 from the air, which can be later sold as carbon credits to companies that need to reduce emissions on paper. It's already announced that a number of deals with firms like Airbus, Shopify, and Thermo Fisher, the use of captured CO2 will be driven by customer preference. So this is one thing that it's controversial, the whole carbon credits thing. But this is something that Occidental is looking into. And I think they're a good company. Mid-sized oil producer Denbury is another leader. The company has over 1,300 miles of CO2 pipeline networks and about a quarter of the US total, and is also seeking to secure 7 underground storage sites, mostly along the Gulf Coast. It was reported last year that ExxonMobil was considering a takeover of the firm. Continue. Caitlin, you ask a great question. Where or what app is a good place to start investing in these companies? So if you'd like to start investing, I recommend, from personal preference, that you download the app Robinhood, because it's easy to do, it's simple to start investing with the app, and you can fund it with $100 and just start playing with it, see how it goes. Then TD Ameritrade is a platform that I use. I use TD Ameritrade, I use Charles Schwab. Those are two of the platforms that I use personally for investing. And to me, those have been the best so far. I have used E-Trade before and Fidelity, but I prefer TD Ameritrade and Charles Schwab. Those are the two that I have. You can also open up accounts for free and start investing in these and other companies. Is there a way for residential people to do something to get carbon credits to sell to companies? There is. If you buy land, or if you buy, in West Virginia, for example, there's, acres of forest that you can buy for not so much money. And you can use that to then sell, carbon credits to companies or sell them on the market. By the end of 2022, Denbury has already announced several large contracts to transport and stow 20 million tons of CO2 a year. The firm expects the number to hit 50 to 70 million tons a year by 2030, and revenue of $15 to $25 per ton of CO2 transported and stored. The industrial gas companies are another active group in the space as they pursue so-called blue hydrogen by sequestering CO2 generated during the manufacturing process. The hydrogen can then be combined with nitrogen to produce ammonia, an important industrial gas used in fertilizers and the production of plastics. So gas companies are getting into this as well with Air Products and Chemicals, a Pittsburgh-based company, and I like this company as well. They're a little expensive right now, but it's one that's on my list of companies to buy if I find a good entry point. So Air Products and Chemicals is investing $4.5 billion to build the world's largest blue hydrogen production facility in Louisiana, as well as a multi-billion-dollar net zero hydrogen energy complex in Edmonton, Canada. The chemicals giant is already capturing CO2 from its 2 steam methane reformers in Port Arthur, Texas for enhanced oil recovery. And then Linde LIN, which is the other company, I believe they're an Austrian company, Austrian or German. They're investing $1.8 billion to build a blue hydrogen plant in Texas and then sell the product to OCI Global's new ammonia plant. The company will capture the emitted CO2 itself, but has contracted with Exxon to transport and store the trapped gas underground. So to me, this is a very interesting part of the stock market that deserves a second look. With all of this money from governments investing into green energy and companies that are then innovating and trying to come up with better ways where they can, achieve these goals that are set by the government. And so, Air Products and Chemicals, Linde, ExxonMobil, Shell, Chevron, these are all companies to take a look at, not just for energy, for their oil, but what they could potentially do down the road there in the future with capturing this CO2 and then using it for other things. Continue. Caitlin says, I've heard that investing a certain amount each pay period or week to be consistent Is there a good way to figure out what is a good starting point? For example, is there a certain percentage? Yes. Now, Caitlin, this is just what I do personally. You can, it's always best to figure out what would work best for you, because every investor is different. There's no two investors that invest the same, that have the same interests, are researching the same companies in the stock market. There's always something that is going to interest you. So if you're just if you're just starting out, what I recommend is that you take a look at a company that you're interested in. If you for example, this morning we talked about McDonald's. If you like McDonald's, then research the company, because it'll be more fun. It'll be more fun that way. If you like, automobiles, research automobile companies. If you like, if you're interested in energy, then research energy companies, because it'll make it more fun for you and it will not be as boring in the beginning. So what I do personally is I invest 10 to 20% of my income, and out of that, what I do is I invest. So my allocation, let's just say it's 10%. So 10% goes into my investment account, and then of that 10%, 80% I invest in a long-term portfolio, and 20% I invest in, that would be like my play money. So that's what I use to trade options. That's what I use to trade some of the more risky things that I'm not planning on staying in long term. So that's what I do. I do 10%, no less than 10% of my income goes into investments. But if there's, if you're not at that point, I would start with either a set dollar amount or a set percentage. So I'm going to start with 1%, and then, you can keep working your way up. I don't know if they work in the UK. There's probably other trading platforms that they use in the UK. I don't really know which ones they have there, Olivia, so I can't speak to that. Continue. Continue. So this is one of the risks there. Since carbon sequestering has never been done on a large scale, its long-term effect on soil and the ecosystem remains unclear, because what they're doing is they're taking the CO2 and they're injecting it underground, so keeping it stored underground. Different types of underground reservoirs may react differently to the injected CO2 and sometimes fail to meet the projected storage capacity. Companies will need to go through many technical reviews before their plans are approved by regulators. So far, only 2 projects in the US have been granted so-called Class 6 permits, which allows them to sequester carbon underground, and the process has taken several years. There are currently at least 24 applications in the backlog. So as hard as they push all of this green energy transition stuff, I don't know how quickly they're going to be able to do, or if they're going to be able to reach their 2030 goals because of things like this. So they're telling these companies to go out, do this carbon capture technology, store it underground, but then regulators need to approve it, and it takes years for them to approve it. So that's one of the drawbacks of all of this, and why I think that even their goals for a certain amount of electric vehicles on the road by 2030 is not going to be reached. I agree, Fox really hurt themselves by giving him the boot. Wayne, I agree with you. I think that it was part of the fallout from the Dominion settlement. I think that when I first saw it, the first thought that popped into my mind was, this was one thing that was discussed during the settlement with Dominion voting systems, that Tucker Carlson has to go, otherwise they're going to take it to court. Continue. And then you have strong pushback from communities where the pipelines need to go through. So lots of hurdles that need to be met before all of these green energy transition ideas can be put into place. But the fact remains that there's a lot of money that the government has set aside, and so this money is going to be used by these companies. Continue. You're right, Michael. It is something that's going to bounce back and forth, but a lot of these companies are investing, heavily in it because there are so many subsidies available. There's so much money available, and so it is something that an investor needs to, take a look at and keep in mind when they are investing in these companies. Carbon capture should be viewed as a long-term investment. David just said Glenn Beck said BlackRock invested in Fox on February. Let me take a look here. Let's take a look at ownership. BlackRock does own 6.34% of Fox Corporation, their shares. BlackRock Institutional Trust owns 6.34%, and BlackRock Financial Management owns 4.09%. So you're looking at they own over 10% of Fox. So that is true, David. Yes, Jonathan, that's also another area of this whole energy thing that you can take a look at is the reactors. I'm going to go into that at some point again. I did last year. There's companies in Washington and Oregon right now that are working on these mini reactors that would power neighborhoods. So that's something else that we can take a look at, and that would be good for investing. What would you consider a short-term investment? Short-term investment for me is 3 to 6 months or less. That's a short-term investment. Sometimes I invest in a company for a day, just a day trade it. That would be a very short-term investment, but short-term is usually less than 3 months for me. So I'll invest in a company. I'll think, it's trading at $20. I think it's going to trade at $22 or $24. I'm going to make between 10 and 20% over the next 3 to 6 months, and then I sell it. Then there's companies that I want to stay in for years and years, and that's long-term. So anything over six months to 10 years is what I would consider long-term investment. Charles, good morning. Yes, any crypto or NFT would be considered a short-term investment. No, there are cryptocurrencies that I'm invested in long-term now. I've been invested in XRP since 2020, since the beginning of 2020. How would I decide if it's short-term? That depends on whether I want the company for long-term, what kind of dividends it pays, how good of a company it is, what its product is, or if I'm just trading something based on news, or if I'm trading something based on technicals, what I see the price being. That would be what I consider short-term. So if there's say for example, a pharmaceutical company that is coming out with a new therapeutic, and it's going to get released in 2 months, I would invest in that company, and then once it gets released, the stocks, sometimes it goes down, sometimes it goes up. But if you're investing on that therapeutic specifically, it gets approval from the FDA, and then the stock goes up because the company gets more valuable. So that would be a short-term investment. It's not a company that I want to hold long-term. or if it's a company that technically has been completely just beaten down price-wise, and it looks like it's getting ready for a bounce, I would invest in it. And then once I make, however many percent I decide that I want to make, it would go back up. I agree with you, Elijah. I think that the discoveries in nuclear is still the greenest form of energy. But I think hydrogen is going to be used in vehicles more than it is, especially larger vehicles like trains and trucks. If they're gonna continue pushing this. Continue? What else we got today? Krista, the credit union will, I'm not going to say it won't be, but that would be an extremely quick turnaround. So right now it probably won't be available by July. Yes, there are different websites that I use to do research. I like, Wall Street Journal, Market Watch, and then if I research a stock itself, there's different websites that I use. Zacks is one of them, ZACKS. They do a lot of research and a lot of great research. Benzinga is another one that you can use. And then if you want to take a look at specifically a company, there's I just recently started using this platform called Ticker, TIKR. It's TIKR.com. And what it does is it just gives you a breakdown of the whole company. So overview, news, financials, valuation, estimates. You do have to pay for it. I think it's $19 or $20 a month, somewhere $29 a month, somewhere around there. Depending on what level you want. There's also a free version of it. But if you want some more in-depth analysis, then I think it's like $19 or $29 a month. And that's a great company because all I do is I just type in the ticker at the top and I can take a look at everything. And I can go back, multiple years for these companies and take a look at their financials. So those are some of the websites you can use. Benzinga, Zacks. You have to create, profiles with a lot of these. Wall Street Journal, I like to take a look at for news. Market Watch. Those are just a couple. CNBC, not MSNBC, CNBC, like the market news. Continue. So here are some. So this is another headline. Bed Bath & Beyond declared bankruptcy. Let's take a look at it. Bad news for Bed Bath & Beyond is good news for other retailers, with certain names poised to benefit from the beleaguered chain's imminent demise, Oppenheimer said in a note on Monday. Bed Bath & Beyond filed for Chapter 11 bankruptcy protection on Sunday after failing to raise enough money to stay in business. The company is asking a New Jersey bankruptcy court permission to auction its namesake and Bye Bye Baby brands. Comments from Bed Bath & Beyond suggest that if a buyer of the company does not emerge, management plans to gradually wind down operations. We are hard-pressed to envision a buyer stepping in to save the chain. The company currently operates 360 locations and 120 Bye Bye Baby stores. While we do expect that certain chains could ultimately capitalize somewhat on a market shift away from Bed Bath & Beyond, these companies include Williams-Sonoma, Wayfair. I think Target should be included in that as well, as Amazon. My question is, am I still going to be getting the 20% coupons, or will they be doing away with those? Bethany says, where will I buy hand towels? Target, I would say, or Williams and Sonoma. That is true. They stopped selling my pillows. Coincidence that they're now out of business? I get 20% coupons texted to my phone every single week. multiple times a week. I don't even know how they got my number, but they found it, and so I get Bed Bath & Beyond coupons. All right, what else we got? You signed, okay. So that's what you've been doing. Bethany signed me up for just puts my phone number in. Next article, what else we got? What recession investors eye companies that can thrive amid slowdown? When everybody starts talking about a recession and everybody gets scared, that's a good time to start buying stocks. Because then you can get in right at the beginning of the market cycle. Continue. More than a quarter of S&P 500 companies are reporting earnings this week, offering investors a clearer snapshot of corporate America's health amid a tightening credit environment and growing recession concerns. So far, it's not as bad as Wall Street had feared. Entering the final week of April, S&P 500 companies' earnings were 5.8% above estimates. Even in a slowdown, there's companies that can thrive. There's companies that can find pockets to really excel in and kind of push their agenda forward. So I do think there's still growth companies to be had around. Continue. He named energy as one sector investors should look at. Industrials, same thing. I like industrials. If you were to look at, say, a big Midwestern industrial or, an ag-focused industrial, that's one that we looked at the other week, Calm, C-A-L-M. They're still doing really well. Their charts look really good, and now their earnings are showing up as being quite strong. The big question, though, is whether tech earnings will deliver. After a down year in 22, the NASDAQ composite has risen 15% year to date, roughly double the returns of the S&P 500. Continue. There you have it. S&P up 7%, Dow Jones up just 2.2%. Continue. The drivers of those gains are now set to reveal how they performed in the first 3 months of 23. On Tuesday, Microsoft and Alphabet will provide updates on their closely watched AI strategies and cloud platforms. On Wednesday, tomorrow, Meta will provide new insights into the year of efficiency. Meanwhile, Thursday brings the first look at the financials of Amazon since CEO Andy Jassy warned of a short-term headwinds at Amazon Cloud Services. With these stocks all beating the S&P 500 by a wide margin year to date, the expectation bar is set quite high. So it'll be interesting to see what happens with these 4 companies this week. I think Google already announced this morning. Or did they? Did I send an article about that? Let me take a look here. I don't think I sent it. In Florida, Amazon is on a hiring blitz again. They just did let a whole lot of people go. Rad, when should you pull out of an investment, especially when it's doing well? What I would do is I would set myself goals. So I wouldn't just buy an investment and then, I'm just going to sit on this one and see how high it goes. If it goes up 10%, 20%, 30%, then set yourself a goal. Okay, I'm going to buy this company at $1 or $10, and then once it hits $13, we're up 30%, I'm going to sell it at 30%. And then if it goes up to $20, you missed out, but you made your 30%. That's what you wanted to make out of that company. So that's how I do that. For my long term, that's for short term. For long term, what I do is I keep an eye on the company. So if I invest, say for example, in Google, right? And I take a look at them, how are they doing? How are they continuing to do? is there competition? So now they have competition from ChatGPT. They have competition from Microsoft when it comes to AI. So what does the future look like? Google isn't as secure as it used to be. And so I'll take a look at that and be like, okay, well, maybe it's time for me to sell some Google and buy a different company because it's no longer what it used to be. So that's how I decide when I'm going to sell an investment, especially if it's a long-term investment that I invested in for the long term, for dividends, etc. If the company no longer does as well as I thought they would do, if their competitive advantage is gone, things like that, that's when I start taking a look at selling them. Let's put up that one tweet that I sent about the housing and go over that real quick. This is from Amy Nixon. I'm going to punish people for being financially responsible and reward them for being financially reckless. And this will make housing more affordable. These headlines parody themselves. Biden to hike payments for good credit home buyers to subsidize high-risk mortgages. Isn't that crazy? I saw that on Twitter the other day, and so I looked a little bit into it. What happens is if you have a credit score of over 720, you're going to be paying a premium, so the average is going to be around $40 a month to subsidize for people who have less than a 680 credit score, somewhere around there 640. They would then get a lower rate because of that. So you're subsidizing for people who don't have good credit. Continue. Apple loses $1 billion in 1997. In 2023, Apple makes $1 billion every 3 days. Today, Apple launched a new savings account paying 4.15%, 10 times the national average with no fees or minimums. The era of banks paying 0.01% is over. Here's why Apple will become one of the biggest banks. Caitlin, you are 100% right. That reminds me of the junk that crashed the market in 2008. That is correct. So they're trying to make housing more affordable, but I don't know if this is the correct way going about it. Because if you have a lowered, what it says is, go to the next tweet about it. I think it's if you have a 20% down payment and a good credit score, you're going to be paying even more. There's one more tweet that I sent about the, not from Andrew, but from somebody else. Yes, Patrick Bet David. If you have a FICO score of 620, you will get a 1.75% discount on your rate. But a score of 740 means you'll pay a 1% fee for your efforts. So this is what we're doing here. And the article is Get This Senior an Economics Lesson. So if you have 740 and a 20% down payment on a house, you're going to be paying more of a premium than if you have a 740 and 10% payment on your house. So it's like it's a sliding scale on how much of a premium you're going to pay. But if you have a FICO score of less than 620, you can put down a lower down payment and you can get a credit. Absolutely, Max. This is an effort to carry out the you won't own anything and be happy plan. Absolutely. So punishing people who have worked hard and are just trying to, buy a house, and now they have to pay for people that shouldn't necessarily be able to get a mortgage. This is going to go into effect May 1st, I believe. So this is an executive order. It's going to go into effect on May 1st. Absolutely crazy. Let's end with Jim Cramer. Here we go. Jimothy Cramer, October 1st, 1908. There's no way this replaces the horse and buggy. Just a little parody for you there to end out Check the Market today. The good news is, Caitlin, that if the next administration comes in, they might reverse that. It is ridiculous. There's people that have, for years been good with their money, and now they have to pay a premium for being good with their money. So, what's stopping people from just getting 10 credit cards and maxing them out and then still getting a mortgage and getting a better rate than somebody who doesn't do that? Well, if you'd like to invest in Revival today, we'll give you an opportunity to do that now. Here are the ways that you can give. $RTGive, Venmo @RTGive, PayPal, text to give, cryptocurrencies. Thank you for everybody who have been giving. What I'm going to be doing is I'm going to do the book that I gave away last week again. Is it The Psychology of Money? Yes, The Psychology of Money by Morgan Housel. It's a great book. I read it and then I listened to it, and I really like it. It puts some things into perspective. So we'll send that to you as a thank you for investing in Revival today. Make sure you claim your offer. If you'd like to send a check, you can send it to P.O. Box 7, Prosperity, Pennsylvania 15329. And then don't forget, tomorrow night, Dallas, Texas. In Fort Worth, Texas, Hilton Fort Worth, April 26th, 7 p.m., one night only. Make sure you register at revivaltoday.com/events. And then join us here on Sunday, not here, at the Roxy Theater in McKees Rocks, Pennsylvania, Sunday morning at 10 a.m. And come say hi if you're there. We'll talk about the stock market a little bit. Thanks everybody for watching. Thanks for being a part of this. Make sure that you share the broadcast. Let's take one last look at the stock market. Stock market's down. NASDAQ's down 0.83%. S&P 500 down 0.7%. And the Dow Jones down 0.3%. We'll see where it ends the day. Go out there, make some money. And we'll see you all next week. See ya.